Hi friends, my name is Dilip. In today's video, we will be continuing the Sanjeevani Booty which was already uploaded. So we will continue these lectures and we will complete the entire GST syllabus for revision purpose. This will be very helpful for one day before examination revision and for your daily revision which you are doing. So last video which I had uploaded, that was on section that was from section 7 to section 14, that is from supply to time of supply. In today's video we will be discussing about two topics, value of supply and input tax credit. So it is from section 15 to section 21. We will discuss from section 15 to section 21. Okay. Section 15 subsection 1 is telling what? Section 15 subsection 1 is telling value of supply is transaction value. Value of supply is what? Value of supply is transaction value. Sir, what do you mean by transaction value? Sir, transaction value means the price which is actually paid or payable where the supplier and the recipient are not related, and the price which is paid is the only consideration, or the price which is paid is the sole consideration. Then section 15 subsection 2 talks about inclusions in value of supply. What are required to be added in value of supply? There are totally 5 inclusions or 5 things which you can add, or 5 things which is given in section 15 subsection 2 which can be added in value of supply. What are these 5 things, sir? All the taxes except the taxes under GST, all the taxes except the taxes under GST, that is CGST, SGST, IGST, UTGST, GST compensations. Apart from this, all other taxes should be added in computing value of supply. Please note, there was a clarification issued by CBIC telling that the TCS under income tax collected at source under income tax should also not be added in value of supply. Then the payment which is made by the recipient which the supplier had to incur, any payment which is made by the recipient which the supplier had to incur should also be added in value of supply. Then any incidental expenses for making a supply, for making the supply of these goods and services, if you are incurring any incidental expenses, that also should be added in value of supply. Then interest, penalty, late fee for delayed payment of consideration. If you supply the goods and there is a payment condition that the payment is required to be paid within 1 month. If the payment is not received 1 month, if you take any interest, if you take any penalty, if you take any late fee, then the late fee which you are collecting, the penalty which you are collecting for delayed payment of consideration, that also should be added in value of supply. Then the last part is any subsidy which is directly linked to the price. If you receive any subsidy which is directly linked to the price, that also should be added in value of supply, provided it should not be received from central government or state government. Please note, the subsidy should be, subsidy should be what, sir? The subsidy should be directly linked to the price which you are paying. Then section 15 subsection 3. Section 15 subsection 3 talks about exclusions from value of supply. What is required to be excluded? What is required to be excluded from value of supply? Only discount can be excluded from value of supply. Only discount can be excluded from value of supply. Now, discount can be of two types. Discount can be of two types. Discount which is given before making the supply or at the time of making the supply, that is discount given before or at the time of making supply. If discount is given before or at the time of making supply, it can be reduced from value of supply if it is shown separately on the invoice. It can be excluded if it is shown separately on the invoice. Sir, what about the discount which is given after making supply? Sir, what about the discount which is given after making supply? Any discount which is given after making supply can be excluded if 3 conditions are satisfied. Discount which is given after supply can be excluded if 3 conditions are satisfied. Sir, which are these 3 conditions, sir? Condition number 1, that should be linked to specific invoice. Condition number 2, it should be agreed between the supplier and recipient. It should be agreed between the supplier and recipient. It should be linked to the specific invoice. And condition number 3, the input tax credit with respect to that discount, the input tax, that discount amount should be reversed by the recipient. It should be reversed by the recipient. Then section 15 subsection 4 says, that if the value of supply cannot be determined as per section 15, then determine the value of supply as per rules. Now, when will I not be able to determine the value of supply as per section 15? I will not be able to determine the value of supply as per section 15 if the supplier and recipient are related and if the price is not sole consideration. So rule 27 to rule 35 talks about of CGST rules 2017 talks about the rules of valuation. They deals with the rules of valuation. Rule number 27. Rule number 27 says, when the consideration is not wholly in money, when the consideration which you are paying is not wholly in money, then follow this rule. Now please note, in this rule there is a consideration involved. First thing you should notice, there is a consideration involved, and that consideration is not wholly in money, meaning there is a consideration plus that consideration is in money also, but partly in money plus partly something else you are receiving. In such cases, the value of supply should be open market value. Sir, what if open market value is not available? Then the money which you are receiving plus the fair value of the other consideration which you have received, the fair value of other consideration which you have received. Then sir, what if open market value is not there, what if money plus fair value of other consideration is not there, in such cases the value of like, kind and quality should be taken as value of supply. The value of like, kind and quality should be taken as value of supply. Sir, what if that is also not there? What if the value of what if A, B, C, all the 3 points are not there? In such cases, take the money place, apply rule 30-31 in that order. First apply rule 30 and then apply rule 31. In that order you apply and find the value of the other consideration which you have received. Combine this value, that will be the value of supply. This will be the value of supply. Then rule number 28. Rule number 28 is applicable when the supply is made to a related person or deemed distinct person referred to in section 25.4 or 25.5. Whenever a supply is made to a related person or deemed distinct person, come to rule number 28. Sir, what is rule number 28 telling? Rule number 28 is telling value of supply will be open market value. What is the value of supply, sir? Open market value. Sir, what if open market value is not there? If open market value is not there, then value of like, kind and quality. Then value of what? Like, kind and quality. Sir, what if value of like, kind and quality is also not there? Then apply rule 30-31 in that order to find the value. First apply rule 30, then apply rule 31 and find the value. Then there are two provisos for this rule number 28. There are two provisos. Proviso number 1 says if the goods are supplied as such, by the recipient. Say I am the supplier, I am supplying the goods to my related person, the related person will be treated as recipient. If the goods are supplied as such by the recipient to his customer who is not a related person, then at the option of supplier, 90% of the amount charged by the recipient from his customer can be taken as value of supply. If the goods are supplied as such means that without making any changes, if the recipient is supplying goods to his customer, then the supplier has an option to take value of supply to be 90% of amount charged by the recipient from his customer. Then what is provision number 2, sir? Provision number 2 is telling the value declared in the invoice can be taken as value of supply. That is, the declared value can be taken as value of supply if the recipient is eligible for full input tax credit. Then rule number 29. Rule number 29 deals with the supply when a supply is made by principal to agent or by agent to principal or vice versa. Supply made to or by agent. In such case, value of supply will be open market value, or at the option of supplier, 90% of the amount charged by the agent from his customer who is not a related person. 90% of the amount charged by agent from his customer who is not a related person. Then, provided the goods should be supplied as such. Then, or if point number 1 is not available, then rule 30-31 in that order. Sir, you are from the time you are telling rule 30-31, 30-31, 30-31, 30-31. What is this 30-31, sir? Rule number 30 talks about cost-based valuation. It talks about what? Cost-based valuation. Rule number 30 says the value of supply will be, in case of cost-based valuation, the value of supply will be 110% of, what is it, sir? 110% of cost of production if you are a manufacturer, cost of acquisition if you are a trader buying and selling the goods, and cost of provision of services if you are a service provider. Then rule number 31. Rule number 31 is the residual rule. If you are not able to find the value of supply as per rule 27, 28, 29, 30, then come to this rule, residual rule, or in residual cases you have to come to this rule. What is rule number 31 telling, sir? Rule number 31 is telling the value of supply will be found by applying the principles of section 15 reasonably and consistently. Reasonably apply the principles of section 15 and consistently apply the principles of section 15 to find the value of supply. Then we have rule 31A. Rule 31A talks about valuation in case of lottery, betting, gambling, horse race, etc. So in case of lottery, the value of supply will be 2 arrow marks. Is the lottery run by the state government? Yes, the lottery is run by the state government, and the value of supply is face value of the lottery ticket into 100 divided by 112. Face value of lottery ticket into 100 divided by 112. If the lottery is run by a person authorized by state government, or if lottery is authorized by state government, then the value of supply will be face value into 100 divided by 128. Face value into 100 divided by 128. Sir, what is the value of supply in case of betting, gambling, horse race, etc.? In such cases, the value of supply will be 100% of the bet or face value or the amount which is paid to the totalister. 100% of the face value or the amount which is paid to the totalister. Then rule number 32. Rule number 32, whatever are there under rule number 32 is an optional rule, meaning these there are few cases, that is forex dealer or money changer, life insurance business, air travel agent. Now whatever is given in rule number 32 is an option. It is an option given to them. Whatever is given in rule number 32, it is optional to all of them. it is not compulsory that they have to follow this. They can follow section 15 if they want to follow, or they can follow this rule number 32. Rule 32 sub rule 2 talks about a foreign exchange dealer or a money changer. A foreign exchange dealer or a money changer. In case of foreign exchange dealer or a money changer, he has two options, option A and option B. So what is these two options, sir? In option A, he checks whether, in option B, again 2 arrow marks, see whether the currency which is exchanged involves Indian rupees. If the currency which is exchanged involves Indian rupees, then the value of supply will be, then the value of supply will be again 2 arrow marks. See whether the currency which is exchanged involves Indian rupees, and see whether RBI rate is available for that currency. Yes, RBI rate is available. Value of supply will be RBI rate minus your rate. Take the positive value. RBI rate minus the exchange rate, the rate charged by the foreign exchange dealer, into number of units exchanged. That will be the value of supply. Sir, what if the RBI rate is not available? In case RBI rate is not available, the value of supply will be, take the rupee value of currency which is bought or sold, take the rupee value of the currency, into 1% will be the value of supply. Rupee value into 1% will be the value of supply. Okay, sir. Sir, what if the currency which you are exchanging does not involve Indian rupees at all? If the currency exchange does not involve Indian rupees at all, then see the point number 1, see the currency which is bought. Point number 2, see the currency which is sold. Take whichever is less. Take the rupee value of currency which is bought, take the rupee value of currency which is sold, take whichever is less from them, into 1% will be the value of supply. Into 1% will be the value of supply. Sir, what is this option 2, sir? You are telling that there is something called as option 2 also. What is this option 2, sir? Option 2 is option B, sorry. There is option 2 also for a money changer. In case of money changer, there is option 2 which is telling it is on the amount which is exchanged. Based on that, the value of supply will be determined. If the gross currency exchange is up to 1 lakh rupees, then the value of supply will be 1% of gross currency exchange or rupees 250, whichever is higher. 1% of gross currency exchange or rupees 250, whichever is higher. Sir, what if it is, if the amount is from more than 1 lakh up to 10 lakh, if the amount is more than 1 lakh up to 10 lakh, then 1000 plus balance of the gross currency exchange, meaning the amount more than 1 lakh, whatever the amount is there more than 1 lakh, that amount into 0.5% of gross currency exchange. Now I'll repeat, if the amount is more than 1 lakh but up to 10 lakhs, then the value of supply will be 1000 plus 0.5% of the balance gross currency exchange. The 0.5% of the balance gross currency exchange. Sir, what if the amount is more than 10 lakhs? If the amount is more than 10 lakhs, then 5500 plus 0.1%, 0.1% of balance gross currency exchange, or rupees 60,000, whichever is lower, Then we have rule number 32 sub rule 3, which is applicable to an air travel agent. Rule number 32(3), which is applicable to an air travel agent. Now, air travel can make domestic booking or international booking. If he is making a domestic booking, then the value of supply will be 5% of base fare. If he is making an international booking, then the value of supply will be 10% of base fare. Please note, in examination they can give you 3 different rates. They will give you base fare, fuel surcharges, then airport development fees, etc. You should not add all these things. You should take only the base fare amount and multiply 5% or 10% depending upon whether it is domestic or international. Then life insurance agent, life insurance business. In case of life insurance business, see whether it is a saving policy or risk policy or single premium policy. If it is a risk policy, then the value of supply is the premium which you are paying. The gross premium which is paid by you is the value of supply. Sir, what if it is a saving policy? What is the value of supply? If it is a saving policy, then 2 arrow marks. Whether the amount allocated towards investment is intimated to you. Yes, sir, amount allocated towards investment is intimated to me. Then the value of supply will be the premium paid, that is the gross premium paid minus the amount allocated towards investment. Sir, what if the amount allocated towards investment is not intimated to me? Then for the first year it is 25% of the gross premium paid for the first year, or if it is a new policy or a fresh policy, then the value of supply will be 25% of gross premium paid. Sir, what if the premiums are paying for subsequent years? For the premium which is paid for subsequent years, the value of supply will be 12.5% of gross premium paid. 12.5% of gross premium paid. Sir, what in case of a single premium policy, sir? In case of single premium policy, the value of supply is 10%. It is 10% of gross premium charge. Value of supply is 10% of gross premium charge. Rule 32 sub rule 5. Rule 32 sub rule 5 talks about second hand goods. It talks about second hand goods. In case of rule 32 sub rule 5, it says value of supply is selling price minus purchase price. Value of supply is what? Selling price minus purchase price. Please note, rule number 32 is applicable for second hand goods provided two conditions are satisfied. Sir, what are these conditions? ITC should not be taken and the goods should be supplied as such. The dealer of second hand goods or the repossessor of second hand goods should supply the goods as such. Whatever goods he has taken or whatever second hand goods he has taken, that should be supplied as such without making any changes. However, he can make minor changes. Two conditions should be satisfied. No ITC should be taken. Goods should be supplied as such. Then only value of supply will be what? Selling price minus purchase price. However, in case of repossession, the purchase price calculation, there is a calculation which you have to make for purchase price. Sir, what is the purchase price in case of repossession? I am talking about in case of repossession. In case of dealer, it is selling price minus purchase price. In case of repossession also, it is selling price minus purchase price only. But the purchase price you will have to calculate. How will I calculate, sir? See what is the actual purchase price of the asset or the second hand goods. Subtract it by 5% per quarter or part thereof. For every quarter subtract 5%, and even if it is a part of quarter, even if there is one day of a quarter, then treat it to be entire quarter and subtract 5% for that also. Then rule number 32 sub rule 6. Rule number 32 sub rule 6 talks about vouchers. What is the value of supply in case of vouchers? In case of vouchers, the value of supply will be the value of the goods and services which can be procured by that vouchers. Then we also have rule number 32 sub rule 7, which talks about when the taxable services are provided to a deemed distinct person. In such cases, if the recipient is eligible for full input tax credit, the value can be taken as nil. Then rule number 33. What is rule number 33, sir? Rule number 33 talks about pure agent services. If you incur any expenses, if the supplier is incurring any expenses by acting as a pure agent of the recipient, then that expenses which is incurred by acting as a pure agent should not be added in value of supply. It should not be added in value of supply. Then rule number 33, rule number 34 talks about the exchange rate to be taken for value of supply. What is the exchange rate we will have to take for finding the value of supply? The exchange rate to be taken for goods is the rate as per customs, that is the rate provided by CBIC, and for services, for finding the value of supply of services, the rate to be taken is gap rate, that is generally accepted accounting principle rate, the rate which is decided between the supplier and the recipient. Then rule number 35 says if the value of supply is inclusive of GST, then the tax rate to be found, the tax amount if you want to find, then the formula is amount including GST into tax rate divided by 100 plus tax rate, Then the discussion is on input tax credit. Section 16 to section 21 talks about input tax credit. Section 16 subsection 1 talks about the eligibility. Who is eligible to take input tax credit? Every registered person can take input tax credit on the goods or services or both which is used or intended to be used in the course or furtherance of business. Now, a registered person can take input tax credit on goods or services or both which is used or intended to be used in the course or furtherance of his business. Then point number 2. What are the conditions for taking input tax credit, sir? The conditions, there are totally 4 conditions for taking input tax credit. Condition number 1, he should be in possession of tax invoice, debit note or any other tax paying document. Then the good should have been actually received by him. When I say he, that means a registered person. Registered person should be in possession of tax invoice, debit note or any other tax paying document. The registered person should have actually received the goods or services. However, there is an explanation which is telling, if on the direction of the registered person, if the goods are delivered to a recipient, by the supplier, then once their goods are received by the recipient, it will be deemed that the registered person has received that goods. Then it is both goods or services. It will be deemed that the recipient has received the goods or services. Then the supplier, the person who is making the supply, should have paid the taxes, and the registered person or the registered person should have filed the return. He should have filed the return to take the input tax credit. Then section 16 subsection 3 is telling that if you are taking depreciation on the tax component of capital goods, there is tax component. Say for example, capital goods is of 1 lakh rupees and 18% is the GST rate. So if you see the invoice, it will be 1 lakh rupees plus 18,000. 1,18,000 will be the total value. Now, if you are capitalizing that 18,000, rupees, which is the tax component, and if you are capitalizing it, that means you are taking depreciation under income tax. If you are capitalizing or taking depreciation on the tax component, you cannot take input tax credit. You cannot take input tax credit. Then section 16 subsection 4. Section 16 subsection 4 says. Section 16 subsection 4 says what is the last date for taking input tax credit. The last date for taking input tax credit is 2 arrow marks. Again, the last date for taking input tax credit 2 arrow marks. The date of filing annual return for that financial year, or due date of filing return for the September month of next financial year, whichever is earlier. Sir, can you please show it, sir? Say for example, we are talking about financial year 1920. Now financial year 1920, I can either take date of filing annual return for financial year 1920 or due date to file September month return of next financial year, that is financial year 2021. Financial year 2021. Now whichever is earlier will be the last day to take input tax credit. Will be the last day to take input tax credit. Then there is a proviso for section 16. The proviso is telling if the goods are received in lots or installment, then the input tax can be taken only once you receive the last lot or installment. Then provision number 2 is telling if the payment is not made to the supplier within 180 days from the date of receipt of goods, then the input tax credit which is taken should be reversed, and this reversal should be along with interest at 18%. However, you can take input tax credit once the payment is made in future. Then section 17 talks about apportionment of credit and block credit. Section 17 subsection 1 says if the goods or services or both are used partly for business purpose and partly for other than business purpose, take ITC proportionately only for business purpose. 17.2 says if the goods or services are used for partly for taxable purpose and partly for exempt purpose, then take input tax credit only to the proportion of taxable purpose. Proportionately take only for taxable purpose. Then section 17 subsection 3 is telling the exempt supplies which is told in section 17 subsection 2 shall also include transaction in securities, sale of land, sale of building, and supplies attracting reward charge. The supply which is made by you which is attracting reward charge. Then section 17 subsection 4 says the banks, financial institutes or NBFC may, instead of following 17.2, they can follow 17.4, wherein they can take 50% of eligible input tax credit and the other 50% shall lapse. However, the option once exercised should be followed for the entire financial year. Then section 17.5 talks about block credit. There are many items which is given which is the credit of which is blocked, such as motor vehicle, vessel, aircraft. See, motor vehicle having more than 13 passengers, you can take input tax credit if it is used for goods, transportation of goods, training of motor vehicle or further supply of motor vehicle, then you can take input tax credit. Same applies to vessel and aircraft. Then any service cost or insurance cost, etc. you are incurring for that motor vehicle for which ITC is available, for that you can take ITC. If the ITC is not available, then it is blocked. Then beauty treatment, restaurant, outdoor catering, renting of cab, etc. If it is not used for further supply of same kind of business, then health insurance, life insurance, then fitness, membership of gym, fitness club, etc. Then works contract services, goods or services used for construction of immovable property other than plant and machinery, then goods used for personal purpose, the supplies made from section 10%, you cannot take input tax credit. Then whatever goods or services procured by non-resident taxable person other than the goods imported by him, goods or services on which tax is paid under section 73, 74, 129, 130, that is fraud cases. Then one more point is there. Goods which are distributed as free samples, gifts, or which is stolen, lost or destroyed by fire. Then section 18 talks about input tax credit in special circumstances. What will happen for input tax credit in special circumstances? 18.1 A, B, C, D, important. Section 18 subsection 1 clause A says if a person who is liable for registration applies for registration within how many days? Within 30 days from becoming liable, then he can take input tax credit on all the inputs, that is the stock which is there, only inputs. He can take ITC on the inputs, whether finished goods or working condition, he can take input tax credit on the inputs which is available one day before he was liable for registration. Similarly, if I apply for a voluntary registration, I can take input tax credit on all the inputs or stocks which is available one day before the date of grant of registration. Then If I am converting myself from composition dealer to regular dealer, then I can take input tax credit on the stock which is available, the stock and also the capital goods which is available one day before that change from composition to regular dealer. But however, in case of capital goods, you will have to reduce the ITC by 5% per quarter or part thereof. Then section 18 subsection 1 clause D says, if your exempt supplies are becoming taxable supplies, then ITC, if a registered persons, please note, it is for a registered person, if a registered person's exempt supplies become taxable supplies, then he can take input tax credit on all the inputs, that is stock which is available one day before the change, and also the capital goods which is available one day before that change. However, for capital goods, he should reduce by 5% per quarter or part thereof. Section 18 subsection 2 says, no input tax can be taken on the stock which is say in section 18 subsection 1 they told you can take input tax credit. However, if the invoice is older than 1 year, ITC cannot be taken. Section 18 subsection 3 talks about ITC in case of change in constitution of business. Whenever there is a change in constitution of business, the new person or the new company can take input tax credit. However, there should be a specific provision for transfer of liability. Transfer of liability, meaning the liability of the old company should also be taken by new company. Sir, what do you mean by change in constitution of business? Acquisition, merger, amalgamation, demerger, or death of a sole proprietor, or conversion of partnership firm to LLP, or conversion of partnership firm to a private limited company, etc. All these are example of change in constitution of business. Section 18 subsection 4 deals with where a regular dealer becomes a composition dealer, or where taxable supplies become a exempt supply, then the ITC will have to be reversed by you. ITC on the on the inputs which is available one day before the change, and all the capital goods which is exclusively used for making that exempt supplies or capital goods, whatever is available with you, the ITC will have to be reversed by you. However, for capital goods, reduce it by 5% per quarter. Then rule number section 18 subsection 5 talks about rules for 18.1 and 18.4. Then 18.6 very important. 18.6 talks about reversal of input tax credit, or when there is a supply of capital goods or plant and machinery. What about the input tax credit? In case there is a supply of capital goods or plant and machinery, then you will have to, ITC will have to be paid back, or ITC will have to be reversed. What is required to be reversed? The tax on transaction value determined under section 15, or input tax credit reduced by 5% per quarter or part thereof from the date of actual purchase of the asset till the date of conversion, or till the date of sale of the asset, whichever is higher. Please note, whichever is higher should be reversed. Section 19 talks about input tax credit in case of a job worker. 19.1, 19.2, 19.3. Section 19 subsection 1 says principal can take input tax credit on goods input supplied to the job worker. Section 19 subsection 2 says goods directly supplied to the job worker, ITC can be taken by principal. Section 19.3 says the time limit. If the goods are supplied to the job worker, ITC can be taken by principal. However, if the goods are not received back, or the inputs are not received back within 1 year from the date of supply, then it will be deemed as supply. It will be deemed that the principal has made the supply to the job worker. Section 19.4, 19.5, 19.6 talks about capital goods. It says capital goods sent to the job worker. If principal is sending capital goods to job worker, ITC can be taken by the principal. If the capital goods are directly sent to the job worker, ITC can still be taken by the principal. 19.6 says if the capital goods are not coming back within 3 years, then it will be deemed as supply. Then, so 3 years and 1 year. Then section 19 subsection 7 is also says which says molds, dies, jigs, fixtures. For this provision is not applicable. Okay, section 20 says manner of distribution of input tax credit by input service distributor. How is an input service distributor required to distribute the ITC which is available with him? Now, the manner of distribution is he shall distribute input service distributor can distribute only those ITC which is available with him. For distribution of this ITC, he should give an input service distributor invoice. How should I distribute? I should distribute based on the turnover of the relevant year, based on the turnover of relevant period, based on the aggregate turnover or turnover of relevant period. Sir, what is that relevant period? Sir, the turnover of last financial year. Sir, what if last financial year turnover is not available? Then the turnover of last quarter for which that details is available. Sir, how should I distribute? The manner of distribution is if the ITC is attributable to single person or a single recipient, then distribute only to that person. If the ITC is attributable to more than one person, then distribute to these more than one persons, 1, 2, 3 person. If the ITC is attributable to everyone, then distribute to everyone. How should I distribute? Based on the turnover of relevant period. What is the relevant period? Last financial year. So what if turnover of last financial year is not available? Then the turnover of last quarter for which the data is available. Now, section 21 says if input service distributor has by mistakenly distributed excess input tax rate, it can be recovered by him. Recovery of excess ITC distributed by ISD can be recovered. Okay, friends. Please note, this is a super fast revision which we are doing. So I am doing these lectures very fast because the intention of this lectures which I am doing is only revision. If you revise more, you will get more marks. If you revise more, you will remember more. If you are remembering more, you will write more. All the best for your examination. I hope you are enjoying it. Thank you.